Let's take a look around the market. Let's see what we got going on. So we should have the charts up on the screen. Finally getting in kind of a, what do you call it, an outside day a little bit. Can you close that door by chance? Just maybe. It's weird staring at a light. Finally getting an outside day, a little bit of a pullback here. We've been talking about this, right? As we work our way into September. Is this the moment to take off a little bit if you can, if you're ahead of schedule? We're going to cover that a little bit as we go. But here's the S&P on the screen. Doing good there. The NASDAQ pulling back a little bit more. That's your big tech names actually falling. Anything that's actually strong today is going to be in that real estate sector, utilities, transports. Here's the transports there, just kind of getting that last little move, I guess, of its move up. Utilities, of course, we've talked about being one of the outperformers in the short term. Excuse me. And people moving to consumer staples. The XLP is the ETF I like to use for that. So, it's on the screen. So people moving more towards the defensive areas there. And I even give you a little bit of healthcare, right? A little bit of that from United Healthcare to kick things off. If you look at the downside of the list here, let's see what we got. Come on, baby. There you go. If you're looking for like activity, the gold miners, right? A little bit of a pullback there. It's just, I don't know what you do with that. Silver pulling back as well. And then tech, of course, if you see the NASDAQ being one of the weaker links there, that's of course why things are weak. Semiconductors, right? You throw that into the mix as well. One other thing I would do, go to the commodity space. We'll take a look at oil continuing to trend a little bit lower as well. So all is good with that. I think the exciting part is just we've got a little bit of an actual pullback starting here. Remember September, we covered that. September being, there you go. One of the weaker months out of the year, if not the weakest month out of the year. I saw some comments, people talking about April. I don't know where you're getting April from because that's the data, not my opinion there. But I see a lot of comments, emails, clients emailing going, I'm going to take a little bit off the table. Think of that. If that's the mindset across the board, and you expand that out beyond what Jazz Wealth is, right? All these people all over thinking they're going to take a little off the table. Well, I'm actually excited because we have something happening, right? It's been really, really quiet. Yesterday was a really, really inside day, and we did a little bit of a deep dive to kind of talk about this. We were inside of a 0.3% range, meaning high to low, right? It was nothing, just 0.3% plus or minus. Not much really happened. So we put together this chart to show you. In the month of August, it's actually quite common for that to happen. 16 days on average. This is all time. We took the SPY. We went back to 1993 when it first came out. We said, well, how many days in August had less than a 0.3% range? It's half the month, right? So very normal for that to be the case, and also very normal for December to be the case. That happens, right? The holidays, we're all just kind of chilling, relaxing and stuff. So I thought that was really cool to know that, hey, what we saw over here with this little tiny little guy, right? Just sticking out ever so slightly there. That's actually normal, right? It would be 1 out of 2 days, give or take, right? Like basically 50% of the days are going to be a narrow range day. Today is not the case, and I hope it continues bleeding down a little bit lower. So 0.7% or so. Really cool. To take it a step further, what we did is we said, well, when these things happen, what's the forward performance? So in other words, if we have we'll call it an inside day in this case, but if we have a narrow range day, does that lead to bigger market movements, average market movements, or below average market movements? In other words, does it tell us something? So let's take a look over here. We'll put together the data for you. We're looking at the average any period move. So the average 1 week move since 1993 for the S&P, 0.19%, average 1 month, 3 months, 6 months, 1 year. Then we said, okay, only give us the performance going forward for 1 week, 1 month, 3 months, 6 months, whatever. If we previously, the day before, had a range that was 0.3%. That's really cool, being able to just like watch the TV. Pretty neat, like that. And so here's what we got. Nothing. It tells you nothing. That's the moral of the story. You have a 1 week performance that's basically average. 1 month performance that's basically average. 3 months basically average. A little bit of outperformance in the 6 month time period, but really it tells you probably exactly what you would have thought. Anyone that's been around for a while would say these types of days are indecision days. Now, if you're one of our clients actually, or a research member, you can go into the site and just search candlesticks we did 3 classes on candlesticks. And the first class talks about how there's really only 13 different types of candlesticks. So as we go over here, you have what looks to be a whole bunch of just gobbledygook, right? When you look inside of there, there's actually only 13 different ways that these can form. And the little guy that we saw yesterday is one of 3 that tell us nothing. We actually call them indecision bars, right? They mean nothing. So really, there's only 5 green, 5 red, and 3 indecision bars that you can have. We had that yesterday, so it doesn't really tell you anything. People come into today, and say, well, I'm going to need news. Give me something, right? So there you go. We actually took it a step further, and we said, well, all right, well, here's all the inside small range days. What about the big moves? Just for fun. So if we go over here, days in the month that had a greater than 5% range. That doesn't mean we were up 5% or down 5%. It means from high to low, the spread is about 5% or more. So if you look at August, it's actually very rare to have a wide range day. So if you're looking for that activity, the excitement, and all the chaos, which is probably not going to happen in August. Tends to happen at the end of September, going into October. Well, wouldn't you know it? Huh? What were we just talking about? Look at that. Going to September and October, you have more volatility, and that's largely what people were expecting there. So really, really cool how that's playing out. As we're talking here, the markets are drifting just a little bit lower, and I want to get into, actually, Chris. There's Chris over there at the bar. How you doing? How's it going? Did you get the slides for performance? I think you got them in there, right? What we looked at was the performance of our funds. We got 2 camera angles? Where's the other one? Whoa.
We're a medium-sized company.
I mean, we're a reasonably sized company, man. We can handle 2 more camera angles. Okay, that's cool. Here's the question. So, how do you know if you can take some skin off the table, right? Take some profits. How do you, in your 401k, your IRA, or whatever? Well, the real easy way to look at this is if you're ahead of schedule. And this is not showing off. In fact, I'm actually going to show, Chris put together some of the, all of them actually. So we're going to show the good and the bad here. So in our funds, if you don't know, we manage our own funds here. We have, give them different names and stuff just to show. But in our aggressive stock fund, here's the performance year to date so we can see where we stand relative to the market. The light blue is the market. The dark blue is us. We are ahead of schedule, and we're trading less volatile than the overall market. So if you look at your 401k and do the same thing, right? Just like pull up your, I don't know, Fidelity or wherever you're at. Pull up the performance relative to the market, and you go, well, if I'm outpacing the market, in this case by a couple percent, I can afford to take a little bit off, right? And what's really cool is we're not even trading as volatile as the market, so we can afford to take a little bit off and not expect that that's going to slow things down too much. So if you're in this position, yes, we just talked about it yesterday, going into the month of September, knowing all the weakness, knowing how much yesterday 36% of stocks were overbought in the S&P. Knowing that, you go, okay, well, I can take some off the table. Here's our large cap fund, which if you have a large cap, this, to be fair, if you have a large cap mutual fund in your 401k, it could be the C fund, S fund, whatever, in the TSP, you're likely outperforming your benchmark, in this case, the S&P. That's just the way things have moved, right? Because of the holdings inside of it and the weight that unfortunately we give some of the mega cap names. So if you're ahead of schedule, you go, okay, cool. I'm ahead of schedule, return-wise. My goal was to play along with the benchmark. I see where the markets are at. I see the seasonal statistics that are coming along there. And my voice is echoing for some reason. Okay, sorry about that. I see what's happening. I can afford to take some off the table. It's not timing the market. It's you being ahead of the market for this little short term. Our mid-cap fund is doing the same as well, not quite as ahead. Mid-cap is not the most exciting. And to be fair, show you this, small cap. Not much has happened over there. Small caps have been a little bit... hello. Oh, hello. I'm doing good. Oh, I got a loud voice. Okay. Proud papa. So here, we can even go over here. Let's look at the Russell, look at the index, just so you can see. Not much is happening, right? And now I'm trying to be a little bit quiet, so I don't talk too much. Jesus. Small caps, not really back at highs. You can see the clear difference there, right? Small caps, large caps at highs, right? Back to small caps. Oop, that's gold. Back to small caps. Oh, not much going on. So for us, it's the same thing happening with us. We're just trending in line. We cannot take off from our small caps. We can't slow things down. We're not ahead of schedule. In your mid cap, your large cap, look in your 401ks. If you're finding the same thing, your growth funds, if you're ahead of schedule, it allows you the opportunity to take some off the table when you have a market that is, anything's possible, right? I'm not saying I can predict the future, but when it's just telling you, hey, we need to take a break, just a little bit of a break. So really, really cool there. I just wanted to share that with you as we go forward there. Chris, how you doing over there? I like that look. So Chris is hanging out at the bar. Is Doug here?
Yeah.
He's here? Okay.
Yeah, he's here.
All right. I won't tell you about that.
He hasn't been told he can't leave.
I'm going to tell him. I got scared. I didn't see his car. A little bit of a birthday gift.
Maybe he did the goodbye and just...
No. We got a little birthday gift for him, so we'll make sure we take care of that. Okay, looking around the market.
It's so good.
He's going to be very surprised. All right, we'll let you guys guess what's going on there. Okay, lastly, just looking around the entire market here, where are places that you would want to put money to work? We're showing retail. You like that? We're already pulling back today. We're looking at gold. You like that? It's not doing anything, right? Just go around the market and look at all these areas. Energy. We already know what oil's doing, right? So energy stocks under a little bit of pressure. Communication services. It had a good run. It's already starting to pull back. Do you want to be that? I can't tell you what to do, but do you want to be that person that's chasing this? Healthcare. We're stuck in a range. You want to be the one that guesses that it's going to break out of the range as the market is a little top heavy here? That relative strength that you'd be hoping for? Looking around the world. If you look at Mexico, what do you do? A lot of international areas are, of course, outperforming, but man, I just don't know what you do there. So I'd like to keep this really simple and say, cheer this thing on, right? Down 0.7% here as we're talking, in the futures there. Really difficult to get excited about backing the truck up and putting a lot of money to work. Not to mention, who's waking up down here? The old VIX waking up a little bit. So, yeah, anyways, just a real quick one just to kind of share with you how things are going out there. If you have any questions, I'll try to answer them. Let me see if I can find those questions. But otherwise, glad to be here and hang out. Jackson Hole, yeah, that's Chris pointing out. Jackson Hole this week. And Jerome Powell speaking Friday, which may be one of his last speeches, right? Or it's his last Jackson Hole, that's for sure. But yeah, so I don't think we're going to learn much out of that. I don't think you're going to get any big takeaway from an interest rate standpoint there. So we'll see what happens. Chris also waiting for the dip. I like it. What is with the crowns? Eloy, so if I click on your crown, I don't know. Something about being a top fan, man. Thanks. I like it. Giovanni says Santa rally pullback. Pullback before the Santa Claus rally. I mean, it's early, right? It's still August. Your wife started putting weekly into her account. Yeah, remember, weekly is always beats monthly if you can't do lump sum. Right? So that's actually on our site as well. If you're a client, you want to check that out. We did the study to see, well, if you can't contribute as a lump sum investment, is it better to do monthly or break it down and do weekly? And of course, it's better to do weekly. Slight advantage there. Hey, Dustin, CNBC reported this AM. Big option put buyers this AM on Semi and Mag 7. Any opinions? I mean, it kind of makes sense, right? Do I have it? If you look at just the S&P minus the Magnificent 7 and then the performance of the Magnificent 7, it is many hundreds times percentage greater of a gain. Well, what's that tell you? Everyone owns a piece of that. I mean, Apple, NVIDIA, and stuff like that. And rather than sell and take profits, because there's no fear, there's no real reason for them to sell aggressively. So rather than do that, they go, well, I have a pretty sizable profit here. I can afford to buy some percentage of puts to hedge any downside to some whatever percentage they decide. And it's cheaper for me to do that than to sell and potentially miss out on something else. So when you have stocks or markets that have these really, really large gains, look at the put volume and you see it actually goes up. So people are just saying, well, I made $15 on this stock. I'm willing to spend $2 to hedge part of that bet. So I believe that. I had not seen that, but I would believe that if that's what came up. Palantir, I saw that was pulling back this morning. I looked at that for me and Eric's little hedge fund here. I didn't do anything, but I saw it pulling back. Oh, God, it was at like 165 when I looked. So a good pullback there. We did have the calls, took those off, of course. And what was your question? Oh, look, I can't sell though. My average price. Your average price is $9.98. Oh, poor guy. I love it. Hey, if you take profits well ahead of the market, would you invest more when behind? Meaning you're lagging behind the market. That could be just like the way you're allocated. It could be a matter of just changing the way your investments are positioned. But when the market is falling, if you can, and you're one of those that does so many dollars a week or whatever, yeah, that's the time. Do a few more dollars. Keep that average cost lower. I love doing that. Yeah. By the way, whoever's birthday it is there, tell them happy birthday. We share the same birthday. That would be Doug in our back office there. I will pass that along to you. Seems a rotation in safe haven dividend payers. Yeah, actually our video from a couple days ago actually highlighted some of the different industries where that was happening. And you are correct, Tom. Absolutely correct. And MicroStrategy. I haven't looked at this one in a while. So since that big run, oh man, it's been a while. Okay. Steady downside. Where's the downside pressure coming from? It beats me. I don't know. That is incredible. Volatile stock. You know what's another one? Not to change the subject, but you know what another one is volatile, and it's that Hims company. You know, the special pills. What a volatile stock that is. From 70 to 40, back to 70, back to 40.
Merger talk that kind of fell through.
Well, that's impressive.
That was the recent movement.
Well, but of course, MicroStrategy, that's Bitcoin related there. They do not, well, they've got a tax issue. I don't know how they're going to solve it, but I'm guessing they're just going to sell Bitcoin. Bit of a problem there when you bet your whole company, and that's not even what you do, but you bet your whole company on Bitcoin. I hope it works out for them. Speaking of Bitcoin, little pullback there. Went down like 3% today. 113,000. Oh, okay. Let me see. Nice. What do you guys think of Ogin? They cut their dividend to focus on growth. This is the type of economy where when you do that, you usually get rewarded for doing that. I don't see that being the case here for them. Normally, you would see a big spike up. It's the type of economy that when you invest in your company, invest in your shareholders, what could be paying a dividend as well, you tend to see that get favored. I don't know why it's not, but it is not. That's a red flag there. Giovanni, at what percent of the S&P pullback would you is a good time to put money back in again? You know, that's a great question because your first thought has to go. To get some of the September weakness to do that. Would you do a video on covered call ETFs like MicroStrategy or Ulti, the Yield Max ETFs? Could we do a video? I think Eric already did, but could it be done? Yes. I actually got to meet those guys in Fort Lauderdale 2 years ago in an elevator of all places. Hey, do you believe about AI agents is the future? It doesn't matter what I think about that. I see a lot of people using them for various tasks. I actually use one of them to create an invoice, change the date, save it as a PDF, and then email it to our compliance department each month, and it just does it. So would that save me like a minute, though? I haven't really experimented to a more full use of it, but you could actually... Oh, now I'm muted. I was temporarily muted. Oh, I found the echo. I'm back. But yeah, I haven't experimented enough from like a repetitious standpoint, like that, something like that, where every month I got to create an invoice, change the date, save it as a PDF, export it, and send it off, create the email, and actually send it. I think it's pretty impressive. I don't have a lot of experience to say it's changing my life. I'm open to it, but all right. We got anything else over there, Mr. Chris?
No, we're just
catching up, doing life. All is good. How'd that go with like his audio stuff? It's fine. Yeah, good now. Nice. Okay, that's all I got. We will see you guys later. And as we're talking, the market's selling off just a little bit more. There you go. Keep it coming. I love it. All right. See you guys later.